Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today I'm joined by Lady D. How's it going, Lady D?
Awesome. Good morning, everybody.
All right, let's jump into some TA. We will start with the daily chart. So the balance over the last few weeks has been a little bit tricky to read. I've done a bit of bouncing back and forth with it. So first I saw it as sort of a pinned horizontal balance in here. Then I saw us as potentially breaking out, coming back to back test that breakout. Then I realized it was more of a channel that we were forming, which is just another form of balance, right? So now that pattern is complete, okay? 2 days ago, we broke out of that channel. The night before last, we came back up to back test the base of that channel. And then yesterday, obviously, we rejected off of it, which led to a large move to the downside. That move to the downside yesterday was about equivalent of the size of the channel itself. So that is what we always expect. When you have balance, whether it's a channel or it's horizontal, you will generally, so here's like another example right here. You will break out, you will come back and back test, and then you will get a move that is at least the size of the range. Now, it can go further. It doesn't have to only go the size of the range, but it will go at least the size of the range. So the fact that we did that yesterday tells me that this pattern is now done. So I'm going to go ahead and delete this from my chart. I don't need to worry about it or think about it anymore. So if I'm not thinking about the market in those terms, how am I making sense of what I'm seeing here? Well, now I see it as a potential horizontal balance once again. Now, the reason I say potential is because what happens today will dictate whether this is balanced or not. And when we zoom in and I show you on the market profile chart, the reason I'm seeing this as potential balance is because the market reversed literally almost to a tick exactly where it did on this previous day. Okay. And so when you see the market do that, like it has all this momentum to the downside and then it reverses at a very exact level, that's something it does when it's in balance, right? That's not something it does when it has tons of momentum to the downside. So there is a potential, and I really want to emphasize it is just a potential that the market is still in balance up here at all-time highs. If that is the case, one of two things will happen today, which is we will either stay inside yesterday's range, we'll stay down here near the lows and kind of go nowhere for a day, or we will turn around and start heading higher today. Those are less likely in my mind. What is a higher probability is that we are going to continue lower today, making new lower lows and getting more momentum to the downside. But if that doesn't happen, I'm not going to be off sides, right? If that doesn't happen, I'm going to recognize that we may be turning around and heading right back up for those all-time highs. Okay, so now let me just zoom in on the market profile chart and we'll get some more specific areas to pay attention to. So first and foremost, the overnight traded inside of the lower end of yesterday's range. So yesterday was a B-shaped profile. That is a sign of more longs liquidating than new money sellers. The fact that we rotated inside that B all night means we need more rotation. We need more chop. We need more grind. We need more balance. The market isn't ready to go up or down just yet. I assume that's going to continue this morning no matter what. So I suspect the first few hours today are going to be very choppy. The market's going to push towards the upper end of the overnight range, probably turn around and push down towards the low, come back up multiple times before it's ready to break out of this area. However, a break below the overnight low could be very bearish for continuation to the downside, and a move above the overnight high could lead to some short covering. So essentially what I will be looking for in those areas, as always is the case with the overnight low, if the market gets down below 57.36 and we get any new selling down there, so any sort of resistance, any move lower in the ticks, any sign that we're getting new selling below that overnight low, I'm going to be short. And I'm looking for a relatively large move to the downside. The next target that's jumping out at me is around 5,700. Okay. If the market gets below yesterday's low and reverses back up in, more chop, more sideways, more grind. Same thing with yesterday's low. If the market just gets a little bit below yesterday's low and then turns around and comes back in yesterday's range, more chop, more sideways, more grind, I would no longer be bearish. But any new selling below yesterday's low just confirms this move to the downside. I believe that move to the downside is the most likely because we now have momentum on the daily time frame. Okay? On this day right here, on the 27th, there was no momentum at all. We were inside the previous day's range. The value area was basically the same as the previous day. So that meant the market didn't know where it was going to go. Well, the next day, the market made lower highs, lower lows, and value was lower. So that's the first tick towards bearish momentum. And then yesterday we had a B-shaped profile, which is a sign of a lot of momentum. And we had value completely lower than the previous day's range. So this, to me, feels like the beginning of a larger move to the downside, and that is what I think is the higher probability. Okay, so now let's say I'm wrong. We spend the first few hours today chopping around, and the market gets above the overnight high, okay? I would expect short covering at the overnight high. Everyone that was shorting in the second half of yesterday, everyone that was shorting all night long, they are all going to get squeezed if the market gets above 57.65. Okay? If the market gets up there, then the market will likely squeeze those shorts and get a bit of short covering. That would not necessarily get me bullish. Okay? What I'm assuming is when the market enters this area between basically these two nodes right here. So when it enters between 57.80 and 86, this area right in here, I suspect it will run out of steam. Okay. Even if it's in balance and we're going to head up to new all-time highs, I suspect they're going to run out of steam right there between 80 and 80. We'll call it 85. Okay. So I wouldn't be overly bullish if we get a little bit of short covering up here. I would more be looking for that momentum to end and turn around and come back down. The bigger opportunity in my mind will be that reversal. Now, if we get above the overnight high and we get short covering, that means I'd be taking profits quickly. I wouldn't be falling in love with long trades. And if I'm entering shorts, I'd be waiting for signals. So I wouldn't just layer in limit sells here. I'd be waiting for what happens when the market gets up there. Does the tempo slow down? Does the volume taper off? Does the ticks reverse and start going the other direction? Right? I'd be looking for signs that the market is going to run out of steam between 80 and 85 before I'd be entering any shorts for sure. Okay. But if the market is going to run out of steam there, it'll likely come all the way back down. So that's basically the way I see it. The only thing that would be a to the moon bullish move in my mind is getting above 86. And then I could really get bullish. So that is my look at today. I would describe myself as more bearish, but expecting a lot of chop, maybe even for the first 3 or 4 hours of the day, for all I know. So I'm psychologically prepared for that. Lady D, what do you have for us today?
Okay, so I wanted to talk about the NQ yesterday. As all of you probably know by now, I'm an NQ trader, usually a scalper. And, you know, in the past few weeks, I love that we've been talking about patience in terms of trading and fear of missing out, jumping into trades too early. So I just wanted to share with you a little bit of my analysis of what happened yesterday, because I'm going to admit I have a very strict trading plan, and I broke one of my own rules yesterday after I was up a lot of money, because I think I just got greedy, and there was news of, you know, unease in the Middle East. There was a lot of geopolitical news, and I thought this thing's going to break even harder. So I just want to go through the day with you, and I want to show you some of the things that that worked really well and then what didn't. And also I want to touch on Charles's analysis of this being a balance area versus a larger breakout with excess and moving down at a quicker pace. So when the market opened yesterday, I think, you know, as we talked about last week too, I love to analyze. I usually watch the market for an hour and a half before it actually opens, because I'm watching for certain signs in the overnight market of what the potential direction might be for the day. So in the overnight, we had a large node of time and volume spent at the upper range of the previous day. So most people, there was a lot of activity happening right here. So this was a prominent POC. I don't normally pay attention to points of control overnight, but if they're rather large and there's hints of like a 45-degree angle, that can be potential, support or resistance. So I was really watching this level right here. Now, when it opened, as you notice with the volume here, the top of the volume is all black on the top. Once the open, it tried to go higher. It took this resistance held, and then the market just moved so quickly to the downside. So this is just something I want all of you to pay attention to. As soon as the market opens, if you see a taper in volume and it tapers off, in a clear way, sometimes that can be your top of the day. Now, I don't suggest trying to do that every day because that's not usually something that works all the time. But yesterday, this is exactly where I thought the market was going to turn around. Now, I didn't expect it to single print. Here's another thing. Look at the day before. There was a lot of time in volume. It was a rotational day. As soon as the market opened and the volume tapered, we single printed out of the previous day's range. Single printing out of the previous day's range without these single prints is a clear sign that the momentum for the day is very bullish. Okay, so the B period it tried to get up in the B period in the previous day's range. It tested it and it couldn't even get in there at all. So then the B period sold off. Now, I'm sure this move happened pretty quickly, and I was okay with, missing some of the move because once I knew that we single printed out of that range, I was, pretty much for the day going to only be taking short trades. And anyway, then what happened is we balanced, and like Charles said, we had a B formation down here. And I want to show you where. So, another thing I wanted to mention about from the open. In the previous day, we had this prominent volume point of control, a prominent point of control, and I put this revisit up here because generally when there's such a large point of control, the market will at some point revisit it the next day. So I was kind of looking for a move at least to this point of control. So that worked out well. And then single printing out of the range, that's a huge red flag. We're out of yesterday's range, and then that's when the market starts balancing. And it was so volatile, Charles, didn't you think? I mean, the volatility, I think the VIX was above 20 yesterday.
Yeah, it was large ranges for sure.
It was super volatile. So I'm always a little more cautious when the market's moving that quickly. But what I wanted to show you, my mistake, is that, so that we had a really wide IB. And with a really wide IB, I know that once the market makes a huge move like that, it's probably just going to rotate the rest of the day. I mean, we don't know that for sure. It could have been a trend day all day long, but I am usually a little wary of such a huge move at the beginning of the day that it's going to need to spend some time and volume and see if there's price acceptance at these lower prices, which there was. But I also, in my rules, I have a rule that one of my coaches taught me, and then I'll never forget. It was so funny because I have kids. He said, think of single prints, either a buy tail or a sell tail, as like a huge stop sign. And if you're a toddler and you don't know how to read stop signs, what happens? You run across the street and you get totally run over, right? So he taught
hopefully not.
Yeah, no, I mean, this is how he explained it to me. And at the time I had, small kids. And so it really hit me like, of course, like a toddler can't read the stop sign. Yeah. They don't know what they're doing and they're not aware. They're going to run across the street and they're going to get run over. Now, how many of us in trading have gotten run over, numerous times? But my rule is this single prints that were on the bottom as the market was balancing and going up and down for hours and hours. My rule is do not take trades in a buy or sell tail. Like that is the do not cross sign for a toddler, right? So we made this poor low in the H&I period. And we talked about this last week. Poor lows generally like to get repaired. But the mistake I made is because there was this poor low, because of the news, I thought I'm going to go short and I broke my rule. And that was a huge mistake because then the market, rallied, short covering, like for another 2 hours. It went all the way back up to test the previous day's range. So that was just something I wanted to share with you all in terms of, really respecting your rules and not letting greed get the best of you, because I was up so much for the day already. I did not need to take that trade. And I knew better. Now, I also wanted to show you, let's see if I can pull it up. I wanted to show you I took a picture of the HI low and what happened after that. So this might help you Let me pull these up for you guys. Let's see. I think it's this one. Yeah. Okay. So this was yesterday. This was the low of the day. Let me see if I can get my pen to work here. Let me just, hold on. Sorry. Okay. So here's basically the buy tail at the bottom. Here's when the market came down. Here was your HI poor low right here. And I sold it. Now, we talked about this last week. One of my most profitable trades is the retest failure trade, right? So we had, this is on the 15-minute, by the way, 15-minute period. We have this huge green candle. We're coming down to retest that. Why I broke my own rule and went short, I think it was just greed. And then look what happened. So we had the green candle closed up. Normally on my retest failure trade, this is my buy level right here. And there's plenty of money to be made if you're patient and you wait for that. Even if you'd missed the whole move down in the A and B period in the IB, all you needed is one good. I tried as a professional trader to tell myself, I try to just do one really good trade a day. And I think if you are patient, there's usually one good trade that happens every day. Sometimes it's, in the IB, sometimes it's later on in the day. But for this one, you would have had to be really patient. But there was tons of money to be made if you had just noticed there were buyers right here. And in the market, especially on a 15-minute time frame, if there's buyers here before, they're likely to be there again, and they were, right? So this is just my lesson for the day in terms of, if you have a trading plan and you've back tested your strategies and you have data and statistics that it works, do not break those rules, even when opportunities seem, when you hear like geopolitical risk and opportunities seem like they're going to be there. There's a reason those rules are in place and you have those statistics. And, I got, hammered for breaking my own rule at that retest failure period. So I'm still struggling with Jim Dalton's, advice in terms of poor lows tend to get repaired. And so I look for a bounce on a poor low thinking it's going to get repaired. But lately the market has changed. The conditions have changed with the 1-day options expiries. It's just not working anymore. So now, we have to, again, be flexible and be quick to change our analysis. And I'm sure I wasn't the only one, who got caught in that short covering rally, probably.
Completely. Yeah.
Any ideas or comments on what I just shared?
So many things, Dee. So many things. Yeah. So this is one of those.
Where do we begin?
It's not. Yeah. Get ready. I'm about to tear you apart. No. No. This is one of those things where it's so much easier said than done, but it's why you have to force yourself to look at just the market generated information and not let outside potential influences influence your entries on trades. So it's like, I agree with you, second half of yesterday, I too thought, purely because of the longshoreman thing, the market was probably going to have a massive correction and this would be day one of it. And it was going to make a bigger move to the downside. But if you can somehow, and again, easier said than done, if you can somehow force yourself to just use the market generated, who cares what's happening fundamentally, what is the market information actually saying, then you're right. The volume was tapering off at those lows. You already had a good low there. So you were, again, that would be a great place to be looking to take profits on a short from above, not a place to be entering a short.
Right.
Yeah. So I love that you described it as greed. Point. That's what it is, especially if you're up for the day. You're just thinking, I'm going to miss out on making all this money. Like the market's going to tank and I'm not going to be in it. And it's like, those are the thoughts you have to fight, because it doesn't matter if the market tanks and you're not in it. Do you have a good setup that has a high probability of success?
Absolutely. And I want to ask you, how many of our traders, because I know this is what happened yesterday. I had the news on, right? I have CNBC on, or I'm watching Bloomberg Live News. And that was out, this news came out about, a missile, and the whole thing happening in the Middle East. And I thought, oh no, like this is so I'm wondering like how it's hard, do you listen to the news while you're trading during the day, Charles? I'm just curious. No,
ma'am. I listen to ASMR videos on YouTube. This is a true story. I do not watch the news while I'm doing it. And I have found if I go on Twitter, or I watch, CNBC clips on YouTube or anything like that, it throws me off for those reasons. So I
Yeah.
really try. I do watch that stuff at night.
That's interesting.
And sometimes it influences my decisions the next day.
Mm-hmm.
But yeah, I don't have it on in the background because of that exact reason. You
Yeah.
hear someone saying something, particularly someone very, very smart. What I was fortunate enough to figure it out very early on, because like back in the day when I used to trade individual stocks, I would watch like Bloomberg or CNBC, right? And some really smart investor or really smart trader with an amazing track record would come on there and they would say like, oh, we love this company, this stock. We think it's doing great or whatever. This is why we bought it. They're going to have good earnings. Da, da, da. They would talk about it and I would go in and I would buy that stock that day. Like when the guy would talk about it, I'd be like, okay, he likes such and such a company. And I'd go buy that stock and it would bounce for like 2 or 3 days and then it would fucking tank and it would come out in the quarterly earnings or whatever, when they have to report I think it's monthly, they have to report their changes. It would come out that hedge fund or whatever was talking on CNBC were selling their shares like 2 days after the appearance. And that they were just going on the news to basically gin up buyers, to get retail buyers to start creating liquidity so they could unload because they wanted to get out of that trade. Yeah. And it happened to me a bunch of times. I don't even want to admit how many times it happened before I learned the lesson. Like, okay, I have to literally do the opposite of what they say to do on financial news. Like, you cannot trust it because
isn't that why they call them talking heads?
Yeah, and it's, there's 2 different ways that they get you. One is they just do both sides of every argument, right? So they'll have one person making a bullish case and one person making a bearish case, in which case you're just creating conflicting information in your head. Mm-hmm. And the other is, like I said, they'll literally go on there and say the opposite of what they actually think to get retail to buy up whatever they're in and they want to get out of. So right. Yeah, I just stopped watching financial news. I was like, this is not helping my trading. So that's why I'm so obsessed about market generated information.
Well, it's true. It does give you cognitive biases. If you're listening to a certain newscast or, like you said, someone you respect, a trader who's been really successful is talking, it's kind of hard to separate that then from what you're actually seeing on the screen. And, I knew better. I mean, I don't know. So yeah, I think this is just a really good thing to share. Mm-hmm. And I think it's another thing I've noticed that when there's a massive IB, like there was yesterday, initial balance period, mm-hmm. the market tends to close inside the initial balance. And that's something, if I had kept that more in the front of my mind, I probably wouldn't have, again, taken that short. Mm-hmm. I think it was just because I was listening to the news and I got caught up in that. And
yeah,
maybe a little
greedy. I mean, I'm looking at the NQ right now, expanded out, and I can totally see why you would get in a short. I mean, ideally you would have gotten into the short earlier, obviously, but I can see it because at that moment it may have looked like the bounce in the E and F period was just a bounce, and that now it's going to make its next big move. It does. The chart does look like that right now. So yeah, the only thing that can protect you in those moments is having those rules of when you enter and why.
Exactly. And I think another good lesson is if you're looking, I know a lot of scalpers, you guys are looking at 1 minute, 5 minute charts. I did that at the beginning of my career and it's just too much noise. Like I can't really see what's happening. And so now that I look at the higher time frames, I mean, this is a massive buying candle right here. There were definitely buyers here, previously. So why would you assume that they're not going to be there again?
Yeah.
I mean, for me, the biggest thing in trading is protecting your capital, right? Protect your capital at all costs. So I had no reason to even have to take any more trades for the rest of the day. I was done for the day. And yeah, so I think sometimes, if we make a mistake, it's good. We have to make sure we learn from it so we don't do it again.
There you go. All right. You did say at the beginning, you had thoughts on the breakout of balance, bigger momentum to the downside. What were your thoughts?
Yeah, so my thoughts on that are, I was really looking at this too. I do think it could be a balance area. And I think, especially this move, when I saw it, it happened so quickly. The buyers just came in. I mean, look at this candle. It's like completely up in the air. And then the next one too, it was like very strong buying at that level. So I would just be cautious today. I agree with you that it could be a larger move down, but I also think there is potential for this just to be a balance area. We're still near all-time highs. We might just be consolidating before the next move up.
Okay.
I mean,
Well,
that's why I'm here. We're supposed to give people like different views and different things to think about, right?
no,
So,
it's me versus you today then. I'm
well,
thinking break lower. You're thinking sideways or higher. So like it's on. We're going to see who wins.
well, it's not even about who wins. It's just about let's just be open-minded and let's watch the market generated information super carefully. Let's not assume it's just going to go tank down,
Yeah, absolutely.
because
No,
that's what everyone's assuming. And I've noticed in the past when it seems like it's so obvious what the market's going to do, it does the absolute opposite of that. So that's just my 2 cents for being cautious today, especially.
as a matter of fact, one of my rules in trading is the trades that seem most obvious to the most people are the less likely to work out. Like it is
Exactly.
just when everyone
That's
thinks the
true.
market's going to do something, it just always doesn't do it, that thing. Now it may go up or it may go sideways, but if everyone thinks it's going down, it fucking won't go down. It's or it'll go down real quick and then reverse and go up
And
the
then
rest
it'll
of the
rip
day.
everyone's faces off.
Yeah.
You
So
know, yeah, I've seen that so many times too. So be careful out there today, traders. And
yeah. All right. So enjoy the chop. I think we're going to go sideways at least for a little bit in the morning.
yeah,
And like I said, if you get short covering above the overnight high, don't fall in love with it. It will be momentum, and you can take long trades, but just take profits quickly because this thing could flip in reverse, at any moment.
right.
All right.
Great.
Thank you, Lady D.
You're welcome. Have a good day.
Bye, everyone.
Bye.